You know, before I earned Bitcoin on every purchase, I would never pick up the bill.
I mean, you didn't want the cash back.
Gentlemen!
The bill.
Allow me.
Allow me.
No, I insist.
A little extra Bitcoin pour moi.
A little extra for me as well. Thank you.
Deciding who will pay for dinner just got a little harder. But with BlockFi, earning Bitcoin just got a whole lot easier. No annual fee. Earn up to 3.5% back in Bitcoin.
Welcome, everybody. It's great to have you here, Adam and Jess. I'm Giles Colwell. Why don't we start with a few introductions, and then I think we'll get straight into it.
Yeah.
So,
Thanks, Giles. It's nice to see everyone in person, finally. I was here last year in virtual context, so it feels good to be present here. So my name is Adam Guren, CIO of Hunting Hill. I was the founder, and we launched back in 2012. Very small, but just friends and family, $10 million of assets. And fast forwarding to today, we're a little over $500 million in hedge fund assets, as well as another $500 million in managed accounts, co-invest accounts. And we started, as Russ mentioned, on the traditional side. We had a few strategies and continue to run those strategies. One is an ETF and index strategy. Another is event-driven, and another is in the options space, trading volatility. And we started participating in the crypto markets in 2016. One of our PMs noticed dislocation in actually Michael's product, GBTC. He was on earlier, and started to look at those dislocations and trade those investment trusts along with some of the ETNs out in Europe that had Bitcoin and Ethereum as underliers. And so, back then in 16, 17, we started very small. I think it was about a 50 basis point position for us to start. And by the end of 17, with the run up in spot, it ended up being around 8%, 8.5% position, which I thought was pretty large and overbearing. And fast forward to today, it's now close to 50% of what we do. So, organically has grown, and there's a lot of opportunity in the space for guys like us. And high level, we sit in the neutral space, and so we're not taking any directional exposure, just looking to carve out alpha and look for dislocations in the marketplace, which there are certainly plenty of, given the volatility of the underlying. So I'll pause there, let Jessica take us
All right. I guess mine's a little bit louder than yours is. So Jessica Raybeck, institutional sales at BlockFi. I lead market making and hedge fund sales, which are a little bit like oxymorons because the needs are completely different. Afterwards at drinks, you guys can ask me questions about market makers and crypto because that's a very interesting story. But what makes it very interesting, my role on the panel, is I started 2 years ago at BlockFi when we were a 40-person company. Fast forward today, we're almost 1,000 people. We're a global company. We have a few people from BlockFi here in the audience that are on the sales team with us. And we've seen immense changes over the last 2 years. So when I started, it was a lot of crypto cowboys trading with 100x leverage on non-US exchanges. Fast forward today, which we'll go into a little bit more detail, it's a really mature space, but there's still so much more to come that you really haven't missed the boat. We're just getting started. So Giles will give a beautiful overview of what we do at BlockFi, but pleased to be here.
thank you. So just very quickly, I just spent 30 years on Wall Street, just joined BlockFi to run our institutional distribution here in North America. Just talking about BlockFi, to give you a little bit of history, started by Zach Prince, who had a fairly significant crypto holding, went to a number of financial institutions, wanted to pledge crypto as collateral against a loan, couldn't do it, and started BlockFi. So if you think about us, our DNA is very much in the lending space. That's where we grew up. A natural progression from that is to be able to borrow coins to short. So that's the sort of next natural progression of that business. That's grown into a very large business. It's kind of Jess has mentioned. We have 500,000 retail clients. We have a significant balance sheet. We have well over 100 clients, institutional clients, trading with us today. And we offer essentially the ability, we offer lending, we offer trading. We have a significant amount of collateral, both cash and coins. What we also have is we have people like me, a lot of people like me who have spent a lot of time talking to institutional clients in their career, and we want to continue to do so. So as people think about moving into this space, we have a really seasoned team. We offer 24-hour, 7 days a week trading. We have people to talk to both in the US and around the globe. So that's my sad, very quick sales pitch for BlockFi today. So I'm going to sort of break this into two pieces. One, I think perhaps we've come a long way in the last year. Perhaps we can start there. And then we'll move into, I'm going to make the assumption that everybody here has decided to invest in the crypto space. If you haven't, I apologize, but we're going to start there. But let me start with the last year. A lot's changed. Let's talk about institutional investors. What has changed from that perspective in this space?
Yeah, so from my perspective, a lot of the institutional investor interest has really picked up over the last 3 to 4 months. And I think a year ago, if we had have conversations with pensions or endowments or foundations, their big concerns were custody. Their concerns were around counterparty risk, execution, hack risk on exchange. And I think fast forwarding to today, we have, at least at our firm, helped mitigate a lot of those risks and really have put some boundaries and guidelines on how do we approach exchanges, approach counterparties, manage our custody solutions. And we have started to see more movement, especially in the endowment and foundation groups. We're actually in the late stages of ODD with an institution in that group, and we hope to get an allocation October 1st in one of our crypto native strategies. So it's just starting to see the leaves turn, so to speak, in the last few months, and I think going forward we'll start to see more of that.
We've seen a lot of firms trying to figure out how to enter into this space. So me personally, working at BlockFi, being one of the first people on the institutional team, I've helped a countless number of traditional firms put on their first crypto strategy. So that can be very scary. And what we offer is a trustworthy place you can go to. They can handhold you. Your first transaction will walk you through tests, make sure your operations teams are comfortable. We'll give sample trade reports, like very common things you would expect. So over the last year, it started with, I just want to tell me a little bit about crypto. And it was really more on the personal side. And now it's, we need to get access to this asset class. How do we do it? And we heard that you guys are helping everybody. We've always viewed ourselves as partners, where it's not necessarily about the sales pitch. How much can we do for you? What can we do for you? We really want to be a trusted partner. We'll make introductions. We'll troubleshoot ideas. So we've really seen the shift from, oh, you're this crazy crypto company. You have that retail offering, which is fantastic. I highly recommend taking a look at it. To now the go-to place for any sort of advice. Oh, we're also, I need to hire a crypto trader. Do you know anybody that is looking for a new role that wants to come here? So we've really become the go-to place for all things start to finish in this space. So to Adam's point, pensions and endowments have been in, dipping their toes in, but really hitting the stride over the past year. We were actually just chatting before this panel. I used to cover insurance companies at Citigroup, and thinking through how many claims they had over COVID, small business loans, health claims, they're really scrambling to try to make up for lost time. And there's not a lot of asset classes that could yield those returns. So they're really starting to look at crypto. So my view is in the next year, you're going to see a shift of the insurance companies to really start taking a serious look. And on this panel, we'll go into a couple different ways that you can get access, but we've really come a long way as an industry, no longer just crypto cowboys, 100x leverage on exchanges, real strategies that you can actually add to your portfolios.
Thank you. So I had a great quote. It's not my quote, but it's a great quote, and I'm going to kind of reuse it here. But speaking to the CEO of a public pension fund, she said to me, I haven't suspended judgment, but I've decided to have an open mind. And she's deployed capital in this space and been very successful at it. I think she started at 50 basis points of the portfolio, and now it represents like 7%. So you sort of know that story. But can you talk about adoption? Where are we? Where are institutional investors in terms of adopting this as an asset class? Give us a sense.
Yeah, so I think it's a challenging question from my seat, and I actually, given that we're here in person, would love to ask the audience to try to solve this one. So if I could get a hands raised for people that have invested personally in crypto, just PA. Okay, wow, that's like probably 70%. That's pretty good. How about investors or folks here in the audience that have invested in crypto on behalf of a client? All right, so maybe 15, 20%. And how about folks in the audience, I guess in that group, that have a robust, scalable process that they think they can put a lot of money to work in cryptocurrency right now? So we got one. So congratulations. It wasn't meant to pick you out, but the idea here was that if we were to kind of use an analogy for baseball, what inning are we in? You know, as far as institutional adoption is concerned, I think just if this audience is somewhat representative, you're probably sitting in the earlier innings, like third or fourth inning. Certainly there's folks that have gone early and have gone in different routes, either whether it be long or a trading strategy in the active managed space. But there's a lot still to come here. And I think there is, some level of weight. And I think, the last conversation with Michael talking about regulation and sort of clarity around what we might see as rules for the road for investors would help. And that would be what I would consider a clearing event and probably bring another wave of investors into the space. And so, I think we're in early stages, and we'll see if folks will continue to take a look at the space.
So there's another quote that I love. Sorry to steal your thunder, but I love that.
Absolutely.
It's from Crypto Twitter. So if you guys aren't following a bunch of crypto fanatics on Twitter, you should. It's highly entertaining. But the quote is, crypto combines all the things you don't know about money with all the things you don't know about computers. And that's actually just very much not true, but it is one of my favorite quotes I've seen. We try to make it easy. I think we really put an emphasis on that. One of the things that really changed recently, and that is going to help us get to the later innings for the baseball analogy, is more of the trustworthy mainstream service providers getting into this space. Now you're seeing your fund admins that you're comfortable with, you're already using today, being able to support crypto. That's kind of step one, because they're really going to handle all of the operational needs for your fund to be totally compliant. Custodians, now that we're seeing NYDIG and Fidelity and trusted names that are getting into the space, is really huge for the industry. CME futures is a great entrance point. They just added ETH futures, which humble brag for BlockFi. We cleared the first ETH futures block. And you have tier one FCMs like Goldman now clearing crypto. That is absolutely essential for adoption. And we're getting to the space where it's not just one player. You're going to see all the big banks adding clearing. I think it's imminent at this point. You're going to see all of your fund admins. The big four accounting firms have a digital asset and blockchain advisory team. So if you had any questions, you can go to people that you really trust now. So they're all there to prep the next wave getting into this space. So the theme is, you haven't missed the boat. There's still so much more to do, and now is really the time. And you can do it in a way that fits your risk tolerance, your compliance committees, and also your regulatory requirements.
So I think that's a good point. One of the things that I've certainly noticed and become aware of as I've entered the space is just the level of sophistication, the level of capital that's available to the infrastructure behind everything that supports your ability to trade and custody. Perhaps that's sort of a good segue into, okay, I understand how I'm going to trade. I understand where I'm going to keep my assets, I think. But let's say I want to start deploying capital. Maybe I can start with you. Where do you start? Like, tomorrow I'm going to start. What do I do?
Yeah, so I think if you sort of solve the beta question or the passive question, there's always active management.
maybe we should just start there, like active versus passive. Like, right. How do you make that decision?
Yeah, so I mean, obviously there's different allocations depending on risk tolerance and depending on really the tolerance of volatility, especially in the crypto space. That's a hot topic for those that get concerned. And I think in the long only space or the beta space, the key is sizing correctly and really managing that risk and understanding that an asset class that can move around at 80 to 90%, 80 to 90 vol annualized is dangerous in certain cases if you're too big. And obviously there's there's a process involved in managing that risk. As far as active is concerned, it's a good place to start is Hunting Hill, or folks like us. I mean, in the active space, one of our main strategies in the crypto space is really on the neutral side. So we are actually taking advantage or looking to do well during periods of volatility. And the reason that strategy works so well is we're looking for mispricings, dislocations across different products, different underliers, and cryptocurrency obviously has no shortage of volatility, and that's good for our strategies. We also have a great team involved in managing the risk there. On the crypto side, we have a PM that came from Goldman Sachs, was the lead ETF market maker there for 14 years. He was there. And then we have a PM also that focuses on the options and derivative space, was the head of co-head of the vol trading group at Goldman as well. So we have a great group coming from the traditional side. And then we also have a director of crypto investments who, smart guy, went to a small school in Boston called Harvard, studied mathematics, and really dives into the coin and token when we really have to focus on that part of the universe. So it's a good team that we've put together over the years, and we have a decent track to back it up. And so I think when you're finding or looking for an active manager, you want to really make sure that there's experience there, that they understand the risk, they understand the volatility of the asset, and can provide the infrastructure and operational due diligence on the back end as well. So.
I'm gonna just take you back to vol, just simply because certainly since I've joined and talking to the fiduciaries and traditional investors that I talked to over my career, that's the sort of number one thing that really comes up. It's just, how do you articulate a return? Like, how do you invest in an asset class that's an 85 vol? Yet despite that, the industry's attracting tremendous capital. Presumably, that it's an 85% vol. So,
Yeah.
So can you just talk to us about what kind of strategies do you use to sort of dampen, mitigate? Like how do you address that?
Yeah, so maybe a couple of things to unpack there. From the traditional side, we come from trading ETFs and indexes, and we're looking for dislocations in that space. And they typically occur when you have stress events, real volatile events, and you can picture 2020 of last year, Q4 2018, keep going back to 15 and financial crisis, et cetera. Those are the times where we really are able to capture dislocations when there's spread in the ETF space. And we apply the same rules from a risk perspective and strategies to the crypto space. So we are looking across different products, different asset classes within the crypto market, so derivatives versus the underlying, futures versus the underlying, things like that. And we really need the volatility to cause those mispricings for us. And where we think fair value is can change over time, but the volatility helps. So I think for starters, that's a good place to be. And I think again for the risk manager in me, it's important to understand what the tails are. So really in the equity space, we always think of what the downside tail is. In crypto, you have to think of both sides. There's coins and tokens and instruments that can go up hundreds of percents in a month, and that's an important thing to model from a risk perspective. But there's also a bit of imagination that needs to come when you bring scenario analysis to an asset class that moves like that. And again, having the experience over the last 5-6 years, which I think in crypto land makes me a dinosaur in some cases, helps, and to really understand what the volatility looks like and feels like in real time.
Jess, I think you're employee number 4 or something at BlockFi.
Oh man, I wish.
So
I think 43 at this point.
Okay,
Out of 1,000,
right.
That's pretty good. Still
Early days. And I'm going to come back to ETFs in a second. But can we just go back? And I think it is important just to kind of emphasize this point. But can you just talk a little bit about how institutional investors should be comfortable with the infrastructure? Like you talked about people like NYDIG, et cetera. But can you just talk about the custody business, the trading business, in terms of why it's so robust? And perhaps you can touch on this as well, Adam. Just how has it become much more industrial and much more institutional, to the extent that people in this room would say, actually, I feel very comfortable with that? Like, what can you give some examples or kind of walk us through that?
So a big part is the caliber and expertise of the individuals that are working at these firms. So there's a lot of great ideas in crypto, which is why we're seeing innovation at such a rapid pace, but you still sometimes need an adult in the room that has experience in cybersecurity, risk management, really top tier GC at your firm. So now we're seeing a lot of traditional individuals coming into the crypto space. We have 3 on the panel right here that really think through what could go wrong instead of, oh, look at all the cool things that we can do. So now you have, we'll use Fidelity as an example. That's a brand name that everybody loves and trusts. They hired really smart people that have kicked the tires, and they're also very much an open book about their security policies, how they think about risk. You can come in, you can talk to the team, they're real people, they answer your phone calls. So there is a real difference now with trust building exercises. When you can look up someone's resume, you're like, oh, wait, do they know so-and-so at this firm, which just happened to Adam before we came out here, the connection with First New York. That really builds a lot of trust and goodwill in the industry. So we really have thought through a lot of the worst case scenarios. And we've been through a couple bouts of volatility. Again, if you want to talk about what happened last March in crypto when there was unprecedented volatility, it was great if you're working with a firm like a BlockFi or Grayscale, Michael just spoke, or some of the other firms in the space. They were there and they can answer your questions. You're like, wait a second, I'm talking to like real people that know what they're doing. It's been absolutely amazing to see that. And I also like being the go-to person. I'm now one of those people that are like the expertise that we brought in.
I know you have an ETF background. An ETF being approved. We've had some talk earlier about Mr. Gensler. Like, can you just talk about ETFs? What do you think?
Yeah. So, loaded question after following Michael on the panel, but I think that Gensler's been pretty transparent about his favorite way potentially to approve an ETF would be through a product that has an underlying, that has fully funded futures on the CME. And while it feels like that's where we're headed and potentially approval could happen in Q4, it's not a guarantee. I do think it probably happens, and I do think that for the space, for the crypto space, generally that's positive, right? That's positive for spot. I would say that for the general public and investors, that's also positive. There will be more options to invest, or more availability to invest in Bitcoin in particular. And I think for guys like us, that's helpful, good for us, because there's more products to trade, more volume in the space, and I think more adoption to participate in potential mispricings in the marketplace. And I think the choices are generally interesting in a world that way, because you have on one hand GBTC, which I think is an innovative product, and what Grayscale did from the start, was pretty impressive on how far they've come with that product. And then you have potentially a 40 Act fund that has futures as an underlying. And if you really sharpen your pencil and decide which one is better for you, it's going to be a choice. I think if you have GBTC, which trades at a discount to the spot price of Bitcoin, maybe it's 15% or 20%, and then you have a futures product which potentially could trade with a drag on it of 10, 15, 20%. Which one do you want to choose? For me, I think potentially the GBTC position might be favorable over something that drags for 15% annualized, but we'll see. It's a long-winded way, I think, of saying that it's generally good for the space. You'll have an SEC, which the previous regime wasn't touching crypto. You were never going to get it approved. Now you have an approval, which is a 40 Act product. It's not physical, but I think that'll eventually come. And I think GBTC would fall under that category as a physical backed product and potentially converted. And there could be others. If you look at like the gold and silver markets, GLD being the sort of brand name in gold, that is a large product and large and liquid. And I think you eventually have a physical product like Bitcoin that will look similar to that.
one of the things that that is sort of somewhat unusual about the crypto space is the way cash trades, right? So, and I think, if I'm sort of sitting down with a fund and they're like, oh, I want to borrow cash, I want to leverage the position, and I'm like, well, it's around 9-10% right now. Like, what are you talking about, 9-10%? So, can you just talk a little bit about how, like, there's a dislocation between the demand for sort of cash in this space and how that affects implied funding rates and how that creates these dislocations in the basis. Like that's sort of a trade. Like for a lot of new institutional clients that I've covered in the past, whether it's a emerging market desk who's very used to sort of volatile markets or parallel currencies, or a macro fund, they're very comfortable getting into this from a volatility standpoint and from an asset class perspective. But the funding piece is still somewhat unusual. Can you just sort of talk a little bit about that?
Yeah, a couple of things to unpack there. As far as funding goes, when, let's say, for example, we may face a counterparty like a BlockFi, we want to borrow dollars. The rate can be in the high single digits, low double digits, depending what we're borrowing the dollars for, what the product is that we're using it for. And that high rate has a couple of things tied to it. One is the counterparty exposure. So, we're facing BlockFi. BlockFi is facing a fund rather than, I would say, a traditional PB like a Goldman or a Bank of America. And BlockFi is participating in the crypto markets, which tends to hedge their exposure in futures. So to your point, there is a funding rate that is applied to futures basis. And in Bitcoin's case, it can trade anywhere as low as parity. But when it gets into steep contango, when there's high funding rates, you look at like in April of this year even, we were looking at annualized rates in 25-30%. And so, for a trading strategy like we have, that's obviously an attractive return on what we consider a low risk trade into the CME futures and hedging with spot. So, basis is sort of has two things to say, I guess. One is on the cash side, where you're borrowing money. There is certainly a counterparty exposure that is embedded in that high rate. And then on the future side, which is another way to view where funding is trading, certainly shows a pretty nice trading strategy when things are rich from our perspective. And tying that maybe back into the 40 Act product, if you do have a futures fully funded product, those products will be buying futures, which will expand basis and cause that cash crunch even further, potentially.
And I think we didn't see anyone fall off their chair when you start quoting some of those rates. This is just showing the opportunity in the crypto space. So something that's very interesting, I didn't go too deep into what my career was, but I started in treasury at Citigroup, too many years ago. So seeing the inefficiencies in traditional banking and being able to come to somebody like a BlockFi, an opportunity pops up and you can ping us. And how quickly can you get a large amount of dollars from someone from BlockFi? Half an hour? And we can send it where you want it to go as long as you're fully papered with the counterparty. That doesn't exist in traditional banking. So you can act on these opportunities so fast. We've had a lot of counterparties come to us, a very crazy story in the middle of the night asking for a large amount of dollars. And in crypto, that's possible to send those, and the real dollars in a bank account. It is so powerful that you can jump on these opportunities in a moment's notice because there is trusted partners and a real ecosystem that exists.
And I will just say, I guess, the sort of flip side to this coin is that I think people don't realize there's an awful lot of yield available in this space. It's not just a aspirational equity-like trade, it's also a fixed income yield trade, which is available because of these inefficiencies. Maybe if I can sort of just, I know we've got a few minutes left, but just kind of finish off with a shameless block for our own company. Can you just talk about how you use us and
Sure.
kind of what we do? Adam's a great client, and we're very happy to have him here talking about us today. So I hope he's going to say something nice, but we'll see.
Yeah. No,
We're really
appreciate it,
buttering
Jeff.
them up right
Yeah,
now.
right. So We started to face BlockFi as a counterparty in 2019, and as they both mentioned, as a young company when we started to face them, and I think that we did it mostly on the lending side because we have a neutral strategy. We need to be long, also we need to be short, and to find a good lender with good rates in a product that is not just off the shelf but can be customized was very helpful for us. And has been continuing to be helpful for us over the years. We found BlockFi as a counterparty to be innovative. We found them to be working with best practice. So you have folks that are coming from the traditional side, B of A, Citi, and the like, and they're putting the client first, at least in my experience, and I think that's really important for us as a counterparty. I also think that because they're coming from the traditional side, they're speaking the same language as somebody who is also coming from the traditional side. So while we do have folks that are hardcore crypto people in our firm, we also have folks coming from the traditional side, like Goldman, for example, and having that interaction has been clean, very low level of friction when we need to execute and when we need to execute quickly when the opportunity presents itself, typically in high volatility. So, I found there are a lot of good counterparties out there, BlockFi being one of the best, and so hopefully that's what you're looking for, Giles. It's true though. It's all true.
Thank you.
Never lie to you.
No. I appreciate that. I appreciate that. But I think look, I'm going to return the compliment, and I'm just going to say that it's very easy for us to to refer allocators to you because you've got a super firm, not only on the investment side, but from an infrastructure standpoint. I think that's important to allocators, so we feel very comfortable around that. Clearly having somebody that's as seasoned as you in this space, I think is incredibly valuable. So, and we love working with you, Adam. So thank you very much. I think, just perhaps on one last thing, as we go into the fourth quarter, I guess my question is, what are you focused on? Like, what are you looking at sort of going into the end of the year?
Yeah, so within the crypto markets, certainly we talked a little bit about the ETF approval and what that might mean for the space. That's top of mind. We also are expanding our business in the derivative space. So we have a quantitative derivative strategy. As I mentioned, a PM that came from Goldman has been working on and scaling. And we also are taking a hard look and have been all year on the DeFi side. So without getting into the weeds of the trade, there's some market making that we can do on the DeFi side. And again, will allow us to capture some yield and harvest some commission. So it's a very interesting space for us. It's growing. I would say just generally, the crypto markets move quick, and we have to continue to hustle to stay on the efficient frontier of what's going on, and it helps to be again partnering with folks like BlockFi who are willing to do it with us in a big way. And so thank you for all of that, and hopefully that gives a little sense of what's to come. But there's a lot going on.
I appreciate that. Well, look, I think we're sort of running out of time here, so I just want to thank you both. We're obviously keen to talk to you if you would like to explore the crypto digital space more, and I appreciate you taking the time to listen to us today.
Thanks, guys.